We have Ashish Ghia, who's Managing Director of Derivium Tradition, now joining us on the show. Ashish, to begin with, just a short while ago, you had some news come in that the government is at, or rather was at, about 80% of its budget deficit target for the entire financial year in the 8-month period of April to November. Do you view that as a comforting signal, given that it does look a little better than the previous year, or do you still worry that there will be excess borrowings by the government in the last quarter?
No, certainly it's not a very comforting figure in that sense, and having comparing it with last year's figures, I don't think that's a valid benchmark. But having said that, government has tended to kind of spend a lot of their stuff in the first half of the financial year, so it's not such an alarming figure. To answer your second question regarding will the government borrow extra borrowing program, I don't think so, for two reasons. One is that the government has shown a lot of fiscal restraint lately. I think they'll be under a lot of pressure to show better show better numbers going into budget, especially to avoid our own rating downgrade. And most importantly, there has been a T-bill auction calendar which was introduced which was announced on Friday. That have said didn't show any sense kind of urgency that government was in need of such a lot of borrowing program. Government currently is also sitting on a lot of surplus cash, so I think most of this I believe that I don't think that the government may announce a borrowing program, extra borrowing program. If at all, there may be an extra issue or two, maybe more towards the March end of the phase.
Right. So, Ashish, assuming that we do see the government stick to the fiscal discipline that it has said it will try and adhere to, and the fact that you have the yield on the 10-year bond now well below 8.1%. Again, also the fact that all of us are working on the assumption that you will see something like a 50 basis point cut on the policy rate front in the fourth quarter. Would it be fair to expect that the yield on the 10-year benchmark bond by the 31st of March will have dropped to levels of 8.6, 8.7%?
You mean to say 7.6, 7.7%?
Sorry, 7.6, 7.7%.
Yeah. Yeah, that's a fair assumption, because it's all kind of putting in place that the extra supply may not be there, at least may not be announced. B, that RBI itself is kind of buying bonds a little bit extra than market expected, and C is that there is a rate cut environment, relatively easy liquidity environment that is coming in. So that's a fair assumption, but I would not stretch it to 7.6. I would rather believe that it will be somewhere in the region of, my target would be 7.75 to 7.8.
What's the call on the currency then, and the direction you expect the rupee to take?
Certainly, rupee is not depreciating, is my firm call. I don't think rupee is depreciating more than 55 to 55.5 levels, because I think there's a very strong resolve within the government and the RBI to kind of protect those levels. The question is how much high can it go? Can it go to 51, 52? I am more at the 51, 52 camp, simply for the reason of the resolve by the regulatory agencies at the lower levels, and I think the budget should be much more inflow, FX inflow positive, because the eye is very, very clearly out there.
Right. Ashish, just very quickly on the fiscal cliff issue that we are seeing in the US, should policymakers not find a solution to the problem at hand, are we looking at a scenario where the dollar appreciates much further, and we'd also see the rupee likely breaking 55 and dropping to 55, 10, 15 levels in the near term?
See, rupee dollar from the perspective of global environment, two responses to that. The last time the fiscal cliff had happened and the US had faced a downgrade at that point of time, which was around a year and a half back, we had a little bit of brunt. Local currency had a little bit of brunt to bear in that sense, but it was not. I think since then we have trialed quite a lot. Lately, rupee is more of domestic issues. Rupee has not even behaved in sync with the yen rise. Rupee has not really kind of behaved in sync with the Asian peers. So I think rupee is a different flow story by itself. There could be a little bit of sentiment issue, but that can really be resolved with the regulatory. That can be tackled with the regulatory resolve that has been shown recently.